Hi everyone, today we are going to discuss about the SA 450, that is evaluation of the misstatements identified during the audit. So in order to understand what is a misstatement, we know that a misstatement is actually the deviation between the account balances, presentation, classification and disclosure which is presented in the financial statements and that of the which is required by the applicable financial reporting framework, and the misstatements can be classified into two: errors and frauds. Okay, evident the mistake awareness. The source of misstatements is actually maybe due to some judgmental reasons. Yes, and it can be either due to incorrect accounting estimates. Maybe we are omitting some amounts or disclosures, or maybe of an inaccurate data also. So these are the sources of misstatements. Okay, so let's see what is the process in this. Basically, this essay serves two purposes. The objectives are classified into two. That is, first, to identify the effect of the identified misstatements, all the identified misstatements, and the second objective is to identify the effect of uncorrected misstatements. Okay, so in the first process, we can say that it is to accumulate the identified misstatements. The first step involved in this is accumulate the misstatements. While accumulating the misstatements, say for example, we found that there are 100 misstatements in the financial statements. Now, the process of accumulating all these 100 misstatements together is the first process, and we will be classifying that misstatements into two. Those misstatements which are clearly trivial and which are not. Clearly trivial means completely negligible. Okay, these negligible items, even when aggregate together, that is still trivial only. Okay, but it is not same as immaterial. Okay, for example, if you are taking like a 10 rupees mistake was found for a company which is having a revenue of 10 crore rupees. Okay, so that is very negligible amount for them. But if I am aggregating these 10 rupees into 100 misstatements, that again comes to 1000 rupees only, again immaterial. Yes, that's fine. Now let's take an amount of rupees 1 lakh misstatement with the comparison with the same company itself. Again, that amount is immaterial, but I can't say that is clearly trivial. Why? Because if I am multiplying 100 misstatements with this 1 lakh, that will amount to 10 lakh rupees. So that means that 1 lakh is not clearly trivial. We should actually investigate what is this, but it is immaterial. Okay, so that is immaterial and trivial has got different meanings. Fine. And we can classify the misstatements into three actually. Apart from the errors and frauds, we can classify these materials into three. First is a factual misstatement, which is actually a misstatement. We have the proof. Second is a judgmental misstatements. That is basically a difference between the opinion of the management and the auditor. Because sometimes audit may feel that this accounting estimate is more appropriate, whereas the management doesn't feel so. So there is some misstatements in that. And third is the projected misstatements, which is relating to the audit sampling. Yes. Second process is to consider or evaluate or analyze these misstatements that we have accumulated. Okay, so while evaluating the same, we should actually make an understanding of what is the nature of these misstatements. Okay, what are the circumstances under which these misstatements would have occurred, and also if any other misstatements may exist due to this, because we have few reasons, right? These current misstatements may indicate that there would be other misstatements too. Okay, that is one consideration. And the second one was that even though aggregate together, this is not reaching our materiality level that is set by us as per SA 320, but it can be very close to this. For example, I have set a materiality level at 1 crore rupees. Now, if I aggregate all my misstatements, that is amounting to 95 lakh rupees. Even though that doesn't reach my materiality level, I can say that it is very close to my materiality level. Yes, so that also indicates the problem that there can be other misstatements too. Fine. So that was the second step. First was accumulation, second was analysis. Third is to communicate and correct these misstatements. So to whom we will communicate? We will communicate this with the management. Okay, and we will auditor actually request the management to correct this. For example, we have found 100 misstatements and we requested management to correct it, and now management corrects 16 misstatements among that. So we have left 40 from that, yeah, and that 40 is called the uncorrected misstatements. Regarding the corrected misstatements, we should not stop there. We should actually analyze whether it is properly corrected. We should have to perform some extended audit procedures to check on whether they have properly implemented the same. Yeah, and for the balance 40, we should actually analyze why it is not being corrected. The first thing we have to ask the management is that why you are not correcting these 40. Okay, and the impact of the same in the financial statements should also be considered. Yes, compare the materiality level now. Okay, and if that is greater than the materiality level, you should actually modify your opinion. Fine. So regarding these uncorrected misstatements, our fourth step is basically focusing on these uncorrected misstatements only. For evaluating this, that is the 40 misstatements which we have dealt as still uncorrected. First thing is we have to discuss in prior with the discuss the impact of the uncorrected misstatements. For that we have to prior to evaluating the effect of these uncorrected misstatements, auditor shall actually reassess the materiality level according to SA 320. That is, for these uncorrected misstatements, we should actually confirm whether it remains appropriate in the context of the entity's actual financial results. Now we have the actual financial results. Initially, when we started preparing or started evaluating the financials, we set the materiality level according to the our initial judgment or the estimates and all. But now we have the actual results. So we should actually check whether the materiality level is actually like whether it remains appropriate now. And second thing is, if as per the SA 450, auditor shall determine whether uncorrected misstatements are material, individual or in aggregate. If whether individually they are they are creating a problem, like they are material, okay, or in aggregate they have creating the problem. So for that we have to analyze the size and nature of the misstatements. Okay, so for example, I am identifying a misstatement of rupees 1 lakh as fraud. Okay, so looking on to the nature of the item, that is very crucial because that is a fraud. But looking on to the size of the amount, that is just 1 lakh. Okay, so we have to consider both. And also we have to consider the effect of the uncorrected misstatements of the prior period. That is also should be taken into consideration. And next thing is we have to communicate this with the TCWG. Auditor shall communicate with TCWG about the uncorrected misstatements and also ask them to correct this unless prohibited by law. So before communicating this with TCWG, we should actually see if there is any law or regulation that is restricting us to communicate this. The same thing applies to the management communication also. And TCWG still feels that this is not yet to be corrected, so they are also refusing this. Then at that point, auditor shall request for a written representation asking that TCWG that why they believe the effects are immaterial to the financial statements as a whole. So they should actually tell us the reason by means of written representation why they are thinking so. Okay, and also a summary of such items, those list of items should also be attached to that representation. That is another point. And at last, the concluding point is, if the still management refuses and the auditor believes that it is not appropriate, auditor can still give a modified opinion. Fine? Yes. And regarding documentation purposes, auditor should actually document what is the amount that is we are considering as clearly trivial. Like, what do you mean by clearly trivial in our situation, and all the misstatements accumulated during the audit where that they have been corrected, how many incorrect misstatements are there, all those things have to be documented for our end also. That is the whole process. Yes, thank you.